Welcome to the Personal Pension Radio Podcast, where you get unconventional insights into wealth building and retirement that actually work. Discover data-driven strategies and learn from a wealth of experience so that you can take your retirement to the next level. Now, here's your host. He was once bitten by a harbor seal, the income engineer, Kraig Strom.
Okay, we are back on Personal Pension Radio. Joined in studio, Justin Bonestroo. Say hello.
Hello.
All right, good to have you. I think we've got everything all set. This is actually going to be the 401k episode. I think I was really very much interested in doing that. We're coming up towards the end of the year. It's a perfect time to be doing tax planning and thinking about the things like 401k. So invited Justin to be back on the show. I think we're going to actually put a lock around his leg and actually keep him around as our on-staff 401k consultant for the podcast. Sounds pretty good, right?
It sounds good to me.
Oh, you already have a lock on the other leg, at home with the kids, right?
That's true.
All right, excellent. So we are broadcasting from Mr. Foley's van down by the river again. It's a beautiful windy day here in Southern California. Great day to be down by the river. Thank you again to Mr. Foley, motivational speaker extraordinaire, letting us use his van. Personal Pension Radio, for those of you who have just joined the show, it's a retirement income crisis in America. We've got 10,000 people that are reaching into those retirement ages every single day now, and we're really seeing that retirement income has become a huge priority, and people are finding out that they were not well planned and well trained and educated. So Personal Pension Radio, we're focused on bringing together the experts and the information you need to prepare for the ultimate day you retire so that you can actually maintain your lifestyle. So whatever life throws at you, whatever roadblocks you might have as far as education, what you haven't heard, what you haven't learned, we're here to try and help you fill in the gaps. Just a short disclaimer before we begin. Make sure that you don't act on advice given on podcasts, radio shows, and television shows. I want you to get good information, good actionable information out of these kind of episodes. But until you actually sit down with someone very specifically about your situation, you really shouldn't be acting on it officially, okay? Everybody has a unique situation. Justin's going to actually share some information today that clearly defines how important it is to have an individual conversation rather than just taking advice from somebody that you might have heard on the radio. So now, as an introduction, those of you who haven't already listened to Justin's earlier episode on the podcast, you can definitely find him at personalpensionradio.com. Excellent episode. But I thought we'd actually start with a bit of a background question for Justin today, just to give us a little background on his work and his education that kind of brought him to where he is now, because he's pretty unique in what he does. So Justin, why don't you give us a little background on that?
Sure. I ended up starting in the actuarial space. It all kind of started when I was in college and wasn't exactly sure what I wanted to do with my life, and was taking a lot of classes, particularly math classes. Thought I might want to be an engineer, so I figured math would give me a good background. But as I got into my second year, I had a professor who brought up to our class, what are you going to do with all of these math classes? And he mentioned... He mentioned the actuarial space.
That's what I was thinking just now. What are we going to do with all these math classes?
Yeah. And I'd never even heard of an actuary at that point, but he mentioned the profession, and it's been consistently rated in the top 5 professions in the United States by the Wall Street Journal. And so I went back to my dorm room and brought it up to my girlfriend at the time, who is now my wife of 12 years. And she had a couple of family members, family friends who were actuaries, so she liked the idea and helped push me in that direction. After graduating from college, I lucked out to get a job in the retirement plan space. Didn't know what I was going to be doing, but made a lot of accidental decisions throughout the way that all turned out to be exactly the right ones.
Accidental decisions. It's except for that first one where you listened to your wife.
That's true.
Who, the old... Greek wedding story, right? Your wife is the neck, right? You think I'm the head of the household, but your wife is the...
Yep. Yep, definitely.
No, that is outstanding. So that actually brings me to one of the questions that I wanted to know, that as you go through kind of looking at your career and what you've done in the actuarial space, and do you have kind of that favorite project? I mean, now for those of you who don't know this, I'm going to just say it. The actuarial space takes a huge amount of brain power. I mean, it's like having, you really have to be focused, and you have to be on this kind of a project because it's not something that I can do. It's not my thing. So you have to have a lot of computing power. What kind of a project really gets you going?
You know, my favorite project is, it's definitely when a client comes to us or a prospect comes to us and they have a problem that needs to be solved. A lot of times we'll be brought in and we'll point out issues, and that's not usually as much fun if you tell somebody they have a problem. But if we have somebody who comes to us with a problem and they're really looking to fix it, ultimately do all the right things, and bring their plan back into compliance, or design just a better situation for them. We have a great client out in the LA area who reached out to us, went through a number of interviews with us, had us bring part of our staff down to their office, and after they hired us, brought out a really big project where we've been essentially looking at all of their employees for the last 5 years to make sure that all the work that they had done in those years was done correctly.
Make sure it was actually all recorded correctly, done right, everything. And for the record, everybody, we're talking about retirement plan design. We're talking about retirement planning, and there's a lot of meat on the bones when it comes to things that you have to deal with when you're doing a retirement plan. So it sounds like that kind of a project was...
Yeah, and the thing that we really liked about that one was their desire to make sure things were done right. They weren't concerned about all of the effort that was going into it. Their main concern was that ultimately things were done right in the end, and it's been a good project for us so far. We just about have it wrapped up now, but that's been one of my favorite projects recently. Until
they change the request, or the company is acquired, merged, or something happens, right?
That'll just bring on the next project.
That'll just bring on the next project. I always ask people, I was actually looking at my notes today, that I asked people in my pre-interview notes for a favorite quote, and Justin had actually shared one that I've liked for a long time. He'd shared one previously from his grandfather, but this one today, it's hard to find out who was ultimately credited with this quote. Mm-hmm. But he said, "In my life, I've survived thousands of tragedies, most of which never occurred." And I've heard that many times, but lately I've had some pretty nice hiccups in one shape, size, or another in the work life and personal life. And I'm going to have to probably say this will be my first tattoo, most of which never occurred.
Yeah, I've heard the phrase in a lot of different versions. I think it's usually credited to Mark Twain. This is the version, though, that I like the most.
Yes, gotcha. Yeah, see, I saw that C.S. Lewis. I've saw Mark Twain. I've seen a number of people, but it's a great one to actually look at. So what I wanted to cover today with Justin, the reason I invited him back on the show, is that this is the season. We're recording this episode towards the end of the year, and in the accounting world, after that October 15th tax deadline, the accounting world starts to shift into planning for year-end tax deductions, the following year tax planning. They start to do pro formas and just getting their clients ready for the end of the year, beginning of next. One of the big areas that in the financial planning space that we see is folks asking about IRAs, 401ks, 457 plans, deferred comp, all these various buzzwords come up, because now they're thinking about tax planning. So Justin, probably the expert of experts that I could ask to come on the show to actually talk about this. So what I want to start with, some terminology that came up recently. That we were at an HR conference and someone was asking about bundled versus unbundled. And you think, what in the heck does that mean, right? We're talking about 401ks and retirement plans. Why is somebody asking me about bundling? What? So I want to start right there. What in the world does that mean?
Sure. Well, every retirement plan has a number of different functions that need to be taken care of, and every one of those functions has somebody assigned to those tasks. So the difference between bundled and unbundled is if you go with a bundled process, you'll have your investment record keeping and plan administration typically done by the same company, where in an unbundled environment, you have a record keeper. There are a number of well-known financial companies out there who offer the access to investments, but then they also offer the website, they prepare statements, and basically the interface with the plan and the investments. Separately, you have a TPA, or a third-party administrator, which is what my firm does, who is completely responsible, independent from the record keeper, but responsible for the ongoing compliance of the plan, plan's initial implementation, and just that ongoing consulting to be sure that the structure, the legal structure of the plan is taken care of.
I think that's, there was a huge amount of information right there, just in that answer. So the parties, it's not just as simple as saying, I'd like to get a 401k, please, right? So in order to do it right, you contact perhaps a financial advisor, someone like myself or our team here at Personal Pension Radio, and you begin that conversation. So we've started, financial advisor is sitting down.
That's true. I did leave out the financial advisor, who is an important part.
Yeah, see how those actuaries, they just leave us out. But you got the financial advisor perhaps, or maybe a CPA was the one who started the conversation, right? Mm-hmm. Then you mentioned the record keeper, or what comes really next in the line? I want to kind of just one at a time. Who are these parties?
Sure. The financial advisor, like you said, is the one who they help advise on investments or help get the right parties brought to the table. But the record keeper is the entity that has access to investments. They have the website. It's where the money is actually being sent to.
Okay, gotcha.
And then employees who are in the plan generally have access to that company's website. They can see their account balances on that website. They get their statements. They get a number of notices from that particular company. That is the company who holds the investments and communicates information about the investments to employees.
Gotcha. And then who's next? And then we get to the third-party administrator?
Then we get to the third-party administrator.
Okay.
And a lot of times, like you said, people are under the impression that it's really just one place that you go to. Why do we have so many parties at the table here? Because I just want a 401k plan.
Right.
I think that it's all offered by one place, but
that was my next question. What's the benefit of either way? I mean, is there, as far as a downside, or perhaps maybe something to consider related to bundled versus an unbundled plan?
Sure. To continue with explaining what the TPA, that's a lot of acronyms in our industry, and I'm glad I can use TPA instead of third-party administrator every time, although it's usually people think I said CPA. But you can almost look at it, it's like a CPA for the plan, because we're responsible for that compliance work. We're responsible for putting in place the legal documents that start the plan in the first place. So,
right.
We aren't handling the investments. We're handling the tax and legal side of the plan, although we're not attorneys or CPAs.
Did you notice that quick little disclosure there, folks? Did you hear how you threw that in there?
Absolutely. So the benefit to having an unbundled plan versus a bundled plan is the fact that we have multiple areas that need to be addressed, and we're able to bring a specialist for each of these areas. A TPA firm, generally all they do is compliance and plan administration type of work. So if you have a bundled situation, you have everything being done by one company. Maybe you don't have that same level of specialization. And it ends up, usually in the bundled environment, the idea is to have it be more of an automated process. So their systems are set up to be a lot more of a data in, data out type of a scenario.
Yeah. No, I've seen that, and I've seen it with some very large, I guess you would call them the record keeper, the large record keeping companies, investment management type companies, where unless the 401k is really, really big, there's not a lot of personal service. I met with someone recently that had a 401k that was managed in a bundled plan that with a very large company. This particular plan, had several hundreds of employees with several millions of dollars in their 401k plan. And I asked them, when was the last time that they had seen a 401k person in person? And she was the human resources director and could not remember ever meeting anyone in person. No one had ever come to visit. So that may be another piece with the bundled versus unbundled. You don't get a lot of that personal.
Yeah, often in the unbundled space, if the plan is smaller, and usually smaller plan versus larger plan for this conversation is how much money is in the plan.
Oh, right.
If there's not a lot of money in the plan. Often you'll get a call center. You don't have a dedicated representative. But ultimately, every year, again, it's a data in, data out type of a process. You don't have somebody who's looking over and coming up with suggestions about how things could maybe be done differently, or even just kind of seeing if maybe something doesn't smell quite right on information that's being received, and following up to be sure that everything is compliant moving forward.
Gotcha. So do you ever run into problems, working with a 401k investment provider, the record keeper, is that right? Is that is that synonymous, 401k investment provider and record keeper, who also offers the bundled service? Do you ever run into those kind of problems?
You would think we would run into it a lot more because most of the plans that we're a TPA on are with a record keeper who also offers bundled services. So you would think there would be some competition there, but in reality, some of our biggest sources of business are those same record keepers who offer bundled services. They understand that when a TPA is able to come in, we're able to, first of all, be a local presence with their client.
Right.
We take a lot of the heavy lifting off of their plate, and we're able to, as I've said, we go away from that automated process, and we're able to use the entire Internal Revenue Code for designing our plans. It's impossible to automate the entire law, so it gives us the opportunity to offer more solutions and just be a lot more consultative with clients. And they understand that it helps with retention of clients. It helps with just overall servicing a plan at a higher level.
And you just said retention of clients, and in your world, the retention of client for the record keeper is, of course, the company's 401k plan.
Exactly.
But if we drill down into the employer space, they're looking at employee retention as one of the reasons in most cases they offer a 401k in the first place. Mm-hmm. And personalized service, more hands-on service, is going to and really emphasize and enhance that employee retention benefit.
Yeah, a big part of that overall, starting at the top, the part of the retention for a record keeper keeping a plan in place is because the company who has the plan is happy with it, and that's often because it's been designed in a way that their employees actually participate and they're engaged in that plan as well. So we're able to just provide a better overall experience because, of that specialization and not having our hands tied with, having to live within a smaller box of offerings.
No, that's a really interesting tie-in because we've got a large audience here and a mix of both business owners, entrepreneurs. We've got folks who are participants in the 401k, but are also the business owner who offers the 401k. So that level of service covers multiple different aspects in the conversation there. That's outstanding. So I actually wanted to touch on a piece that's something that recently happened. Justin and I actually went together because, full disclosure, as a certified financial planner, I'm well versed in the 401k conversation, retirement planning conversation. However, in the 401k space and defined benefit plans and all of this area is so fraught with data, information, I guess, or overwhelming amount of data, and the regulations change constantly, that whenever I have an opportunity to consult with a client about adding a 401k or updating their 401k, I'm always inviting Justin to come for a visit with me. So we sat down actually recently with one of my clients, and he had unwittingly made a potentially very serious 401k misstep. And Justin right away caught it, and maybe you could give us kind of a background on that and then kind of dive into why this is such a big deal.
Sure. It was actually one of the more common mistakes that we see, and generally common mistakes that we see in a bundled plan. When we do take these types of plans over, we take a good look at their past compliance or see what they've done previously. And in this particular case, the business owner was looking at putting in place a 401k plan for their employees, and then let us know that they had put in a plan just for themselves previously because they had a side company. And unfortunately, within the structure of the law, they didn't have anybody asking those additional questions. And within the structure of the law, you can't have, as a business owner, generally you can't have your own company on the side that has a plan just for yourself if you're not offering it to your employees.
That was the big aha moment. And the look on his face was, wait a minute, because I'll say it because Justin might not want to say it. As the CFP, I'll say it for the CPAs in the room. Please try not to offer third-party administrator style advice. Okay, this is an area where you gotta, as a CPA or a tax planner, you really should contact someone like Justin, because the advice to open the solo 401k came from his accountant.
Yes, and we do see that. Usually if we come into a situation and that kind of advice has been given from somebody that they trust, and we point out that it might not have been the most correct advice that they followed there, it takes some convincing. And in this case, we were able to come to the conclusion together that we needed to. Luckily, no money had been put into, and we were able to wrap things up quickly before it became a real big problem. But it just goes to show why you want to have a specialist who really is having those conversations with you, and rather than collecting a spreadsheet at the end of the year and telling you how much money can go into a plan.
No, it's a good point, because it was an honest mistake, if you will, that this client, he was looking for tax planning advice. Of course, right at that fourth quarter of the year, it's now time to talk about reducing taxable income. And I think CPAs are born genetically programmed to go right to certain bits of advice as it relates to tax planning. And one of them was, well, you need to have a 401k. Let's get that set up. And great advice. I think we definitely want to have a 401k for this gentleman, but we need to do it differently, because Justin mentioned something. I think is it called an attribution rule, or what is that? It's like, it covers everything you do. You could have 20 separate individual companies.
Yeah, it's pretty in-depth, the way the rule actually
Try
works
not to make my head hurt.
I'll avoid as many facts as possible. Generally, the idea is that if somebody owns multiple companies, the ownership between those companies the companies are kind of attributed together. They're aggregated. So
gotcha. Not attribution, aggregation rule. Got it.
So when we run all of our compliance testing at the end of the year, while two companies may truly be separate for retirement plan purposes, they might have to be treated as being the same company and everybody run together. And it's generally, when we bring up that conversation, it's the exact same answer I get every time, which is, but it's a different company. I don't have to put them together. It's a different company. And we point out that unfortunately, for retirement plan law, they have to be treated like they're the same company.
Right.
And there are exceptions to this, but in general, one of the things that I've learned working with a lot of business owners is they'll try to be creative, and they'll say, well, then I'll just give part of the company to my wife or something like that. And something that I've learned is, if you think that you were able to come up with a loophole that quickly, there's probably already been a close put to that loophole.
Yes, there's already been a close to that. And just to tell you just a quick funny story that somebody actually shared with me yesterday, that there are things out there by the IRS that are called private letter rulings. Okay, private letter rulings, Justin is very familiar with, I'm sure, because there's a million of them for the 401k and retirement benefit space. But when somebody gets in trouble that has enough money to maybe fight it or argue with the IRS, they might argue all the way to tax court. They might argue all the way to the point where the IRS comes back and issues a private ruling just for their case that says, in this situation, this is how the IRS treated it. And so it's not necessarily tax law. It's something that might be referenced in the future. But the funny story was this, that a friend of mine, a financial advisor, had requested information related to a tax question that just didn't seem right, that was advice given by someone else to one of his clients, and he requested the private letter ruling from the IRS. In his dismay, the lady said, that'll be $17. And he says, well, $17. He didn't really think about it. He figured that was just the charge for the private letter ruling to be mailed to him. Well, as it turns out, that was the cost of shipping, basically, because it was about 190 pages long. That one private letter ruling was about 190 pages long. Wow. So just like Justin said, if you think that you've come up with a solution to get around the 401k aggregation rule, yeah, probably not.
Yeah, there are ways around it. It just takes a lot of, there can be ways around it. It just takes a lot of planning and a lot of thought.
And that's the key. A lot of planning that I would assume you're generally not going to get that kind of planning from a bundled plan. That really is where you have to have the specialist involved.
Exactly.
Now, when we talk about that, some people would then automatically think, well, does that mean that it costs more, right? It's not always that simple, right? That the true cost of bundled versus unbundled might be very different.
It's true. A lot of times we're told, well, why would we want to go this route? Because right now my 401k plan is free. And we all know
there's no free 401k.
There is nothing for free. The way that the costs are charged may be different. A lot of times bundled plans are charging their costs directly through the investments. So while the business owner might not be seeing an invoice coming in the mail, they are paying for the plan, or at least somebody is. Maybe it's the employees who are in the plan, but generally TPAs send an invoice directly to the business owner for their services, and still a cost of the plan either way, just looked at a little differently when there's actually being a check written for those expenses. But often it's a similar cost. Sometimes a TPA does cost more, but one of the points that we like to make is ultimately if you look at the true cost of your retirement structure, the whole plan, what it's costing, it really takes into account more than how much you're paying a TPA firm. There's more than just your administration.
I mean, it's investment selection. It's for example, let's talk about this gentleman who had the solo 401k almost mistake. Mm-hmm. The true cost of 401k for him could have been tens of thousands of dollars in fees and penalties and taxes and everything else if he had not had that discovered by a qualified TPA in an unbundled conversation. It's
true. There's the potential cost of doing things wrong, that could be a cost to have it fixed. The cost and that cost to a professional to come in to fix it for you. The cost and potential penalties to IRS or DOL, cost and extra contributions going to employees. But on top of that, too, just the cost of setting up the plan the right way, without proper advice, you may be missing out on deductions you could be receiving every year.
Oh, that's a good point.
You could be putting in order to get a certain level of deductions, you could be putting in more for employees than what would be necessary. So there are a lot of different areas that really should be looked at in determining the true cost of the plan, and paying $200-$300 more to have a TPA work on your plan rather than a bundled situation and get that ongoing consulting and keep your overall costs down usually makes a lot of sense.
Oh, I absolutely agree. If you haven't already guessed it, everybody out there, I am a big fan of the unbundled approach, having an expert like Justin consult in those areas that are so critical, because you've heard me say it on this show before. If you're new to the show, go back and listen to some of the previous episodes, that the 401k is an awesome accumulation tool. However, when you don't pay attention to all of these nuances, it can be a big risk. It can be a big risk for the business owner who is not managing those obligations correctly. So I think that's an excellent point, Justin, that the true cost, I would argue all the time, the true cost is actually lower when you've got a TPA.
I agree.
So I actually wanted to move to a spot here, this words of wisdom, if you will, tips and precautions. I always like to get some feedback, especially as we enter this fourth quarter at the end of the year. Just want to get your thoughts on, as people are out there thinking about it, and I want you to think about this in the audience from the perspective of maybe you're an employee whose company doesn't offer a 401k. Well, go to Personal Pension Radio, send me a note, and let's put me in touch with the people in the HR department, and Justin and I can consult on a 401k plan, right? Maybe you already have a 401k plan and you don't know if you have a bundled or an unbundled plan. You have no idea what your 401k costs. Go to Personal Pension Radio and request a consult. I will help you go through your 401k to make sure that you know what it's costing and what perhaps you might be able to suggest to the company for some improvements there. Okay, so don't be afraid to do that. And if you're a business owner, do the same. You've got to know this stuff. But Justin, what kind of tips and precautions, if you could, give to the audience out there that would be helpful on both sides of the equation?
Sure. We work primarily with business owners directly, so that's I think I have a little more to offer there. But
yeah,
right now, as Kraig said when we first started the interview here, after October 15th, tax planning mode.
That's right.
So,
that's right.
I just got my first K1 this year as a partner, and first time.
And congratulations, by the way. Did you hear that? Justin's actually achieved partner status.
Thank you.
Do you have more than a broom closet now? Did they promote you?
It's slightly larger than a broom closet.
Slightly larger, and you have your own parking space over at Vaughn's across the street, right?
That's true. I ride the bus, but so this was my first year getting a K1, my first time filing my taxes after April 15th, and I understand where our clients are coming from a lot more now than I used to. But between now and the end of the year, business owners just oftentimes wrote that big tax check and realized that made them start those conversations with their CPA and realize that they're going to be in a position to write another big tax check for next year. So we see a lot of companies come to us between now and the end of the year looking for some solutions to put in place a plan and increase their tax deductions, be able to retain more of those profits without having to pay tax on it. So between now and December 31st, if you want to put a plan in place and get a deduction for 2015, it needs to be signed by December 31st.
And just as a favor to Justin and all of the TPAs out there that might be listening, don't wait until the 28th or the 30th to do this. I mean, they do have family, and Justin might want to, get out of the broom closet and go home for New Year's Eve, right?
It's true. Every year we do put in at least one plan on the 30th or 31st, but we like to start around this time. Well, primarily, or ideally we would have started by now, but we do like to have a chance between now and maybe the end of November to put together some illustrations, show what a plan might look like.
Right.
And then give us a chance to draft all the documents that are necessary, give you a chance to review them, have your legal counsel review it, make sure that it makes sense for everybody.
No,
but
absolutely. We
would just want to be sure that the plan, if you want to go that route, the plan does need to be put in place by December 31st.
Gotcha. Well, I actually had one last year. A business owner contacted me after speaking with everybody but me. He called to say that he was getting ready to start a defined benefit plan, which is a pretty substantial tax-deductible contribution, and he had received some advice to put a large amount of money into a certain financial vehicle that he was getting ready to write a big check, and he contacted me just sort of as a, hey, this is what's going on, because I'd been trying to reach out to him. And I had to just grab him through the phone and say, whoa, hold on a second. What he was doing was last minute, and he was about to make a last minute, very expensive tax decision. And we were able to fortunately catch it right at the end where he still put some really good tax planning in place, but try not to wait until the end because you tend to then rush through it. Okay? Really seek out that advice. If you're an employee, no problem. You can contact me. If you're a business owner, you can contact us through Personal Pension Radio. You can contact Justin. But definitely don't wait until it's kind of that last minute. So now, when you think about it, we've talked about this bundled versus unbundled, right? Justin mentioned you mentioned something earlier about the entire law, or being able to take advantage of. Come back to that, because I put that in all caps in my notes. Being able to take advantage of the entire law. What do you mean by that?
Well, working with a third-party administrator gives you the chance to have those conversations and really talk about your situation and what makes the most sense. And a TPA is able to look at that situation, take the entire Internal Revenue Code, figure out the best case scenario or the best solution for you, and bring you that solution, where generally a bundled plan is going to be able to look at what they're able to offer and bring that to you and see if your situation fits into
your situation fits into their thing,
into their offering.
Right, instead of something being tailored.
Exactly.
Yeah.
So by using a third-party administrator, it gives you a lot more flexibility in being able to design the right program for your situation. And beyond the initial design, you have somebody sitting next to you who's able to, on an ongoing basis, be sure you remain compliant. Ask those questions if something doesn't look right on the information we're receiving at the end of the year. And also to help guide and understand the responsibilities that you have as the sponsor of a retirement
It's pretty
plan.
substantial. I mean, when you use a word like fiduciary, you've got to be pretty careful.
Exactly. And a TPA is going to be able to consult with you to help you both understand those liabilities, but also to mitigate it and to just generally run your plan the best way that it can be run.
Gotcha. And I think that's a great place to end, is just make sure that, again, try not to rush into something at the end of the year. Remember that it is a big risk when you bring it on and you don't do it right. But it's also a tremendous benefit. I mean, in today's world, to offer a 401k, to offer retirement planning benefits, that is a fantastic retention tool. You definitely don't want to miss it. It's also a great tax planning tool, an awesome accumulation strategy, because remember, you've got to accumulate wealth so that you can get to the top of your mountain with a plan to distribute that wealth. And a 401k and retirement planning this way is an outstanding way to do that. So Justin, once again, how do people contact you if they want to ask you questions? If you're an HR consultant out there, if you're a business owner and you want to just call Justin directly, Justin, how do we get in touch?
Sure. You can contact me either directly at 310-212-2626, or you can email me. You can find my email address through our website. That's www.acibenefits.com. Or you can email me directly. It's a long email address, but
go for it. We're going to put it in the show notes, but go for it.
It's justin.bonestroo, that's BONESTROO, at acibenefits.com.
All right, outstanding. I think that's a great place to go. If you're planning for that year-end tax time, this is one of those calls you definitely want to make, folks. We'll talk to you again real soon on Personal Pension Radio. Thanks, Justin, for being here.
Thank you for having me.
Thank you for listening to the Personal Pension Radio Podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we'd appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.